Hello, ladies and gentlemen. Good morning to you, and trust you are doing very well out there. Okay, you know how we do it, so let's kickstart the session. But before we do, I want to know that we are good to go this morning. So if you can see my screen and you can hear my voice clearly without any distortion, please let me know in the comment section by typing hi in the comment section. So let's see what we have here. I would like to see some feedback, please. So if you can see my screen and you can hear my voice without any distortion, let me know right in the comment section by typing hi. So let's see what we have here. Okay, I can see 531903. Okay, thank you very much. Good morning to you. Christopher Jane wants some help. Well, we are here. Good morning to you, Christopher Jane. 959, good morning to you. Nidza 86, thank you very much. Hey Valerie, how are you doing this morning? Carrie, good morning to you, Carrie. Thank you very much. So I'll take this as a positive feedback that we are good to go this morning. And it's on this note I welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour I'm going to be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And you all know how we do it. We have a handful of financial instrument that we have been monitoring since the beginning of the week, and not until yesterday we also had another pair included, that is the GBPJPY, which we are also going to be reviewing today, managing the existing trade and at the same time looking out for more opportunities on this instrument. And for those who are joining us for the first time, you are highly welcome on board. I'm glad to have you guys around, and this is what we do on a daily basis. So you might want to be with us every time, 10 a.m. UTC, 11 a.m. West African time, as we come here to get ourselves prepared for the New York session every day. Without further ado, let's dive right into the business for today. And the first thing we normally do is to keep tabs with the fundamentals by checking the economic calendar to see if we do have any high impact event coming up today. And it's very interesting that in the last 24 hours things have been, there is a little twist in the sentiment of the market as investors have fled to the relative safety of the dollar and the US Treasury yesterday after the mixed US economic data that showed retail sales and housing index are holding up positively. And we have seen the market reacted positively on that one on the charts, as we saw how majority had continued to put more in the dollar. So we are going to be looking forward to how the market reacted to the high impact event yesterday and what we need to look out for as we get prepared for today. Then for today, Wednesday, May 17th, we have the Bank of England's governor going to be having a speech. He already done that, I think, about an hour ago. I'm here to get an highlight on that one. So we are going to be looking at how the market has reacted to this event from a psychological point of view, after which we are going to be using the information we have gathered there to make an informed decision for today. So besides the features from the UK docket, we don't have any other high impact event for today. So let's dive right into the chart and let us look at things from a technical standpoint. So the first thing we are going to be doing today is to look at the US oil spot as usual. And on the US oil, this is what we have here. So since the beginning of the week, we have been witnessing some choppy situation actually. So we shall be running through how the week has started for us on the US oil spot, after which we are going to be going into what to look out for today. So the first thing we did here at the beginning of the week was to acknowledge the nature of price action at the beginning of the week. So we saw this situation here where price action was trapped within a range between the $70.15 level and the $69.30 area, giving us a little consolidation phase around that area. And you all know what we do whenever we have this kind of simple setup. We want to see price action either break out of the resistant line of that channel or break down the support line for trading opportunities. And with our buy stop order above the $70.15 level, as you can see here, we had our first buy position for the week, and since then price action had continued to find higher highs. So on the first day of this week, we had a 160 pips move on our first position, and then we added more positions at the breakout of both the resistant line and the $70.40 area to give us another 130 pips move before this old chopper situation began. And during our live session yesterday, we acknowledged the continued selling pressure around the $71.38 area, which also shares a confluence with that bearish trend line, which happened to be a resistant line that we identified on the 4 hours time frame. So for those who are not part of our live session yesterday, don't worry, I'm going to be talking about that in a moment when we scale up into a higher time frame. So we had this whole situation figured out yesterday, and we saw a simple but interesting reversal pattern gradually evolve around this area yesterday, something like an head and shoulder pattern. And because of the setup here, we said we are going to be selling at the breakout retest of that neckline we identified at the $70.91 area. And a couple of hours into the New York session yesterday, we saw the privilege, we had the opportunity of joining. In fact, the market gave us a signal. We had an engulfing candle that broke through the neckline area. And in fact, if you had missed out on that first opportunity, the market gave us more opportunities in this market. As we can see, multiple retests of that structure to incite this bearish move to the downside. And we saw our price action moved about 90 pips in our favor before this whole bullish momentum happened. So for those who took advantage of this bearish momentum yesterday, you are well done, and kudos to you for being on standby to catch that move. So with that being said here, let's see what we are going to be looking out for today, and what is really going to be our plan as we get prepared for the New York session today. So the first thing I will be doing here is to go into the higher time frame, the 4 hours time frame, so that we can start from there, looking at the structure from a technical standpoint, and then come back into the 1 hour time frame to make an informed decision. So on the 4 hours time frame yesterday, this is what we were able to spot on the 4 hours time frame, and in fact since the beginning of the week. So what we did on the 4 hours time frame was to take into consideration the trading activities in this market since the beginning of last month, that is the month of April. And what we saw here was quite interesting and simple enough. And here is the fact that price action has been very bearish. And to further emphasize the strength of the sellers in this market, we had this whole descending channel figured out after connecting the series of lower highs and lower lows in this market. So we had a trend, we had a descending channel which we were using to guide our trading activity. Now something interesting happened last week where we saw our price action broke out of our $72 area a couple of times, as we saw here, hereby breaking out of the resistant line of that descending channel. So we had this whole situation with a new trend line formed yesterday here, after noticing that price action had consistently respected this structure. So now with this new trend line we have here, it was serving as another yardstick for us yesterday, where we said as long as price action remains below that trend line, we feel comfortable in our sell position. And this was exactly what incited our selling opportunities here yesterday, where we took advantage of this 80-90 pips move to the downside. And with the look of things right now, if you look at what has been happening in this market in the last 4-8 hours now, you will see that we have a candle bringing price back into that entry point that we sold yesterday. It's looking more bullish at this point, but we can't conclude that, as this candle is still running and it's about 2 hours 15 minutes old at this particular point in time. So we still need to see how the market is going to be reacting to that proposed neckline we identified yesterday at around the $70.91 level. So with the information we have gathered here, then another thing I would like to show you here is our $70 area, which has been a very strong determinant of price action since the beginning of this month. As you can see here, at one point we had sellers break down the structure. Then at another point here, we saw how this level was a strong buying niche. Then in the last couple of weeks as well, we have been seeing how this area has been a buying niche. And yesterday, as soon as price action got into the $70 area during the early hours of today, we saw another buy pressure coming in from this area to give us a clue into the strength of the buyers around that area. So with this area hold as a platform for more buying opportunities in this market, well, we are going to be answering this when we scale down to a much more lower time frame. So now the question right now is that the bullish move we saw here in the last 1 hour or two, will it break out of the $70.91 area? And if it does break out of the $70.91 level, we want to note that the trend line here would have been broken, and any breakout of this trend line is going to be signaling a bullish momentum. So let's see what is going on the 1 hour time frame, after which we make our decision for today. So right now we are back at the 1 hour time frame, and like I was saying, on the 4 hours time frame, we want to acknowledge the fact that this level here has been a strong demand zone since the beginning of the week. So I want to call it my temporary demand zone, let me call it that way, because it's been a long-term bearish momentum in this market. So we named this level a temporary demand zone, at least in the meantime. So I want to give it temporary demand zone. So this is around the $70 area. $70 zone. Okay, so I want to place this right inside the box and give this darker color. Okay, so now we have a demand zone figured out here where price action had consistently respected that area. So now with the last couple of hours now, we have seen this engulfing bullish candle. So price action had broken out of the $70.91 area a little bit here. So I'm of the opinion that buying above the $70.91 area seems most appropriate at this point, as a breakout of that structure would have broken out of this trend line that we have here to incite another opportunity for a buy momentum in this market. So let's be on standby to catch that move just right above the $70.91 level. And if price action breaks out and we see a situation where price comes back to retest, we don't want to be worried about that, as it could be a retracement to do a retest of the structure to incite another wave of bullish momentum. Now with this whole situation here, we have a tendency of multiple entries in this market, as we have another structure right there at the $71.38 level. Let me label it $71.40 area, which looks more promising at this point. So we also have an opportunity to add more position to our existing trade if price action ever breaks out of that structure. So let's see how price action plays out going forward. We also have another structure here at the $72 area, where a breakout retest of that level as well will be giving us more opportunity to add more position to our existing trade. So let's see how this plays out. But rest assured that I will be with you right in the comment section to give you updates. Okay, hold on a second. Give me a moment. Hold on a second, please. All right, so that is my view here on the US oil spot for today. If you do have any questions, feel free to let me know right in the comment section. Okay, Nest 57, good morning to you. Okay, now good morning. All right, so in the absence of no questions, I want to assume that we are good to go. So I will be moving on to the next option, which is the US Tech 100. So on the US Tech 100, it has been quite a profitable week so far for us on the US Tech 100, as you can see here. So we were able to spot, hold on a second, let's go up into the 4 hours time frame. Let's look at things from an holistic point of view, while we'll come back into our lower time frame to see what is really going on here. So this was what we saw at the beginning of the week, right on the 4 hours time frame. We saw our price action had been on a very strong bullish momentum since the last trading week of the month of April. And to further emphasize the strength of the buyers in this market, we connected the series of higher lows here, which has given us this resultant bullish trend line that you can see on your screen right now. And price action had consistently respected the trend line, and in addition to that trend line, we had a key level at 13,300, which happens to be our yardstick for this week. So this was what we were looking forward to this week here. So we can see how this level was initially a sell zone at one point, that is during the later part of last month, before we witnessed the breakout of the structure. I think last week this happened, last week exactly. And since the breakout of this level, we saw how the 13,300 became a new platform for buying opportunities in this market. And since then, we have seen how that level had been negating all attempt by the sellers to break down the structure at every point in time. Even at the beginning of this week as well, we saw how buy pressure sprang out from that area, which also shares a confluence with that bullish trend line. Now, the question right now is, will this bullish trend line continue to hold the bullish momentum here? As you can see, as soon as price action got into that 13,500 level, a very strong psychological area, we have been noticing some selling pressure around that area, as price action is yet to break out of the previous high in the last 24 hours. So when we scale down to a much more lower time frame, like the 1 hour time frame, we begin to see things more clearly. And yesterday, I told us all yesterday that we want to, during our live session yesterday, this was where we were during the live session on Tuesday. Okay, I think we were here. Okay, we were around this area here. So we were looking forward to more opportunities at the breakout of the 13,435. So we said here that as long as price action remains above this level here and the trend line, we feel comfortable in our buy position while we look out for more opportunities in this market. So the 13,390 was a platform for buying opportunity yesterday, which you can see what happened here. We saw a sharp rejection and price action continued to move to the upside. We also had another opportunity to add more position at the breakout of the 13,435. So we had a total of about, from this one, we had about 110 pips move from that area. Then from here, we had about 60-70 pips move before we saw this bearish momentum begin. And I do hope you moved your stop loss accordingly, as you know how we do it here. When price action moves significantly well in our favor, we want to be moving our stop loss accordingly to lock in some profit. And this was exactly what we did, and before price action took us out, so we were able to lock in some profit there and make some small bucks from that particular move. Now, going into the New York session today, what is going to be our plan? What do we expect to see here to either support a bullish momentum or a bearish move? Well, if we look at what has been happening since the beginning of the week and following the breakout of this 13,390, it makes more sense to look out for more buying opportunity. And considering the fact that price action is sitting right above a bullish trend line, it makes quite a whole lot of sense to look out for more opportunities to buy. Now, another thing that will also caught our attention here is following the test of the new high at the 13,500. I would like to acknowledge that level so that we can see have a visual understanding of what is going on here. So we have the 13,500. So let me map that out here and label it the 13,500 level right there. So since price action tested that new high there at the 13,500, we saw this impulsive move to the downside, and interesting enough, this impulsive move transitioned into what looks more like a reversal pattern in the form of a double bottom structure, though it's not yet a confirmed reversal pattern yet, as we need price action to break out of the neckline of that structure. And you all know what we do whenever we identify a potential neck reversal pattern like this. The next thing we want to be doing is to identify the neckline of that reversal pattern, which will definitely be a platform where we are going to be looking out for buying opportunity, and a breakout of that neckline will definitely validate the potency of this reversal pattern. So we have a neckline here at a 13,465. So what will make this whole reversal pattern valid is, for one, price action does not break below the previous low. That is one. Then secondly, price action breaks out of this neckline. Then at this point, we shall be seeing this as a valid reversal pattern. Now, a breakout retest of that structure will give us more opportunities to buy, while we look out for more opportunities at the breakout of the 13,500 area to add more position to our existing trade. So this is what we shall be looking at to add more position to our existing trade and looking out for more buying opportunity in this market. So as long as price action remains above the 13,435, we want to look out for buying opportunity. A breakout of the 13,465 will validate this double bottom structure, giving us more opportunity to add more position to our existing trade. Now, coupled with the reversal pattern here, the potential reversal pattern here is this trend line I was able to spot here after connecting the series of lower highs. So you can see price is here to break the previous high. So we haven't seen lower highs in this market, but one interesting thing about the lower highs here that still gives us an insight into the potentials of buyer here is that price is yet to find a lower low. And because of the fact that we have been seeing buy pressure around this area, it's quite a beautiful sign that buyers still have a say in this market. So if this trend line is broken to the upside, then at this point we want to be looking out for buying opportunity so that we can maximize the potential of this move to the upside. So what this simply means is that we would have had the privilege of joining the bullish momentum even before the breakout of the neckline had a 13,465 happen. So a breakout retest of this trend line will welcome buying opportunity. Then we could as well be on standby to be part of the move when price action breaks out of the 13,465 level, where the breakout of the 13,500 will welcome more buying opportunities in this market. Now, in as much as we're looking out for buying opportunity, you know how we do it here. We don't want to keep all our eggs in one basket. We want to be as flexible as possible. The market is a very fluid environment, and for us to be consistently profitable in such environment, we need to be as flexible as possible. So if we have a bias prior to the New York session and things come out different from what we think it is, we should be capable and able to move and and move and shift accordingly to join the next move. So in as much as we are looking out for buying opportunity at this point, we should not ignore the potentials of sellers too as well. And if we look at this structure, what do you think we can see here that will make us to sell the US Tech 100 today? Well, personally, first of all, we want to consider the bearish trend line we just identified here. So if I extend this out into this area here, we have something like this. So this is the trend line we identified earlier. So as long as price action remains below the trend line, then we want to look out for selling opportunities. But this will not happen unless a breakdown of the support line here at the 13,420 area happens. So remember, this area has been a strong buying niche in the last 12 to 15 hours in this market. So we want to see price action take out all the buy positions here to give us a signal that sellers are gradually coming in. And remember, we are not getting too excited as soon as the breakdown happens. So we are not having a sell stop order at all around that area, as we still need some confirmation to happen. Remember, we are on a very long-term bullish momentum, so we need price action to break out, then do some retest of structure on our lower time frame, where we start seeing selling pressure come in. That is, buyers find it very, very difficult to break above the trend line. Then at this point, we want to consider selling the US Tech 100. Now, if we continue to sell and price action drops further to the downside, right into that level had a 13,390, which also shares a confluence with that bullish trend line we identified earlier. If I zoom out, you will see the bullish trend line. So you can see the bullish trend line sharing a beautiful confluence with that 13,390. So what we are going to be doing here, move your stop loss as soon as price gets into the structure, lock in the position we are currently in, and wait out to see how price action will react to that level. And depending on how price reacts to that area will determine if we are going to be adding more sell position or getting ready to buy. So a breakdown of the structure retest will welcome more selling opportunities in this market, while the appearance of buy pressure above the 13,390, which also shares a confluence with the trend line, will be a sign that price action is about to respect the trend line one more time to incite another wave of bullish momentum. So these are my views here on the US Tech 100 today. So we have a couple of structures here we are going to be using to guide our trading activity. Most importantly is this trend line we have here, which is highlighted with that red thick line you can see on your screen. So that is the trend line. So as long as price remains below the trend line, we look out for selling opportunities, and if price action breaks out to retest the trend line, we look out for buying opportunities. And remember, we have structures around the 13,465 to welcome more buy position, and structures around the 13,500 to welcome more opportunities to add more position to our existing trade. So these are my views here on the US Tech 100 for today. If you do have any questions, feel free to let me know right in the comment section. So with that being said here, I will be moving on to the next pair. And the next pair we shall be looking at today is the GBP. Is it the GBP USD? Okay, it's the XAU USD. We didn't talk about the GBP USD yesterday. So let's run through the XAU USD and see what is really going on in this market. So since the beginning of the week, we have been selling the XAU USD actually. So let's run through what led us into selling the XAU USD. Now, if we scale up into the 4 hours time frame, this is what we saw at the beginning of the week. We saw this flat channel where price action was ranging between the 2045 level since the second week of the month of April and the 1980 area, giving us a beautiful consolidation phase. So we had a supply zone here. As soon as price gets into that area, we saw our sellers jumped in to negate the bullish attempt to break out of that structure. The same thing also happened here when we saw sellers brought price into the 1975, we saw how they negated the buyer's attempt to break down the structure. So this was what we saw at the beginning of the week. And for the fact that price action was trading below our $2,020 area, which happens to be our key level for the week, we said we are going to be looking out for selling opportunity, and we are not going to buy at the beginning of the week. I'm talking about here that a breakout of that structure is what we are going to be looking out for by this one. But one thing we have noticed here is that throughout the first 24-48 hours of the week, we saw our price action continue to trade just right below the $2,020 area to further emphasize the presence of sellers at this juncture in the market. And because of this, we scale down into the 1 hour time frame to identify how majority in this market has been reacting to that level since the beginning of the week. Now, this was what we were able to spot at the beginning of the week. So we saw this old chopper situation where for the first 24 hours of the week, price action was ranging within the $2,020 and the $2,018 area. And we also had this bullish trend line also to guide our trading activity for the week, where we said if price action remains above that bullish trend line, we want to look out for buying opportunity where it will lead to the breakout of our key level to the upside. But we also consider the opposite too as well, that if price action breaks down the trend line, then at this point we want to be seeing a momentum shift in the market, as the trend line may no longer have the capacity to resist the selling pressure in this market. And this happened Tuesday morning, where we saw the breakdown retest of structure, and with a sell stop order below the $2,014.50 level, we had our first sell position for the week, and we were lucky enough to be part of this move. As you can see here, price action continued to drop further to the downside, and since Tuesday we have seen our price action dropped over 300 pips in our favor. And for those who are part of this opportunity, well done to you for being on standby to catch this move. Then yesterday also we had the privilege of adding more position to our existing trade, as we saw price action broke out of the $2,000 level for the first time in the last 1 month, and continued with the breakdown of the structure here. We saw price move another 170 pips move in our favor before we started witnessing this choppy situation since the New York session yesterday. Now going into the new week, now for those who already still have a sell position running right now, it is quite reasonable that you move your stop loss to secure the current position, as anything could still happen from this current structure. And the most appropriate area I'm suggesting that you move your stop loss to is anywhere just right above the 1,993 level. Anywhere above that area seems most appropriate, as we want to give price action room to breathe, with the hopes that this move is going to continue to the downside. Now, since yesterday's trading session, this is what we have here right now, and price action appears to be going through an indecisive phase at this point. And since we do not have any macroeconomic event that will be affecting, high impact macroeconomic event that will be affecting this commodity today, we are going to be looking at this from a technical standpoint. Now, following the impulsive move that started yesterday New York session, we saw it drop into the 1,986, and we saw how price action has been trapped within that range. So we have a beautiful flat channel just between the 1,993 and the 1,986, and you know how we do it. Whenever we have a simple flat channel like this, we want to see price action to either break out of the support line for buying opportunity, or break down the resistant line for buying opportunities, and the breakdown of the support line for selling opportunity. And with the way things are looking right now, especially in the last couple of hours, we have finally seen price action broken down the 1,986 at this point, which for me is looking more like a bearish signal. And if this whole situation becomes valid, then we already have a bearish rectangular pattern in our hands, as the breakdown of the structure retest will be sending price crashing to the downside. This is from a technical standpoint. So with the breakdown of the 1986, I will be advising that we want to anticipate a bearish momentum in this market, and in that regard we want to be having a sell stop order just right below the 1986 to be part of this bearish move to the downside, and with a stop loss sitting somewhere right around the 1993, which will be dovetailing to about 60 to 65 pips stop loss in that case. So this is what we are going to be looking out to sell. Anywhere below the 1986 should be welcoming more selling opportunities in this market. Then there is one more thing I would like to call our attention to here. If we zoom out of the structure, remember at the beginning of the week we acknowledged the fact that price action has been bearish in this market, so it's reasonable that we look out for more opportunities to sell. And when we connected the series of lower highs and lower lows, we had this descending channel figured out right now, and right now price action is close to the support line of that descending channel. So we want to be very careful around this area. So if price action continue to move to the downside, as soon as it gets into the 1980 here, another key level to watch out for, we want to be moving our stop loss to secure our sell position, while we look forward to see how price action reacts to that level to determine if we are going to be adding more sell position to our existing trade. Now, a further breakdown of the 1980, which also shares a confluence with the support zone of that descending channel, will be welcoming more opportunity to add more sell position to our existing trade. So let's be on standby to catch that move if that is going to be the case in this market. So in as much as we are looking out for selling opportunities here, we also want to keep tabs with the potentials of the buyers too as well. And if we consider the fact that price action is sitting right above the support line of that descending channel, the tendency of buyers coming in at any point in time cannot be ignored. So because of the fact that price action is sitting above that support line, we cannot ignore the potential of the buyers to come in, probably to push price back into the resistant line of that descending channel. So because of this situation here, we need to be very careful and also consider buying too as well. Now, what do we want to see on the structure that will make us to buy the XAUUSD for today? Now remember, we said here that we already have a consolidation phase. We have a channel right here between the 1993 and the 1986, which has a tendency of also transitioning into a reversal pattern too as well. And if we look at this closely, following the impulsive move into the structure, we could see a situation where this breakdown of the 1986 could turn out to be a false breakdown. And if that is going to be the case, then we could have a situation where this whole structure could transition into a reversal pattern. And you know how we do it. Whenever we have a potential reversal pattern gradually forming or unfolding, we want to identify the neckline of that reversal pattern, where the breakout of that neckline will be validating the potency of that reversal pattern. So in that regard, the resistant line of this channel at the 1993 is going to be serving as the neckline of this reversal pattern. So what we are going to be looking out for to buy the XAUUSD is to see price action break out of the 1993. Remember, we are not getting too excited here, as we still need some confirmation to happen. Don't forget that this is a very long bearish momentum, and as long as price action remains within the descending channel, the potentials of sellers coming in anytime is still very possible. So we need a serious confirmation that buyers are finally trying to gain some momentum here. So we want to see price action come back to retest the structure at the 1993 or around that area, with the appearance of buy pressure above or around the structure on our lower time frame, giving us sign that sellers are finding it difficult to break back below the 1,993, then it's at this point we want to be looking out for buying opportunity. And if it so happens that this old bullish momentum continues to the upside to climb back above the $2,000 area, then at this point a break above of the $2,000 mark would have also broken out of the resistance line of that descending channel, which will be the first time price action will be breaking out of that structure in the last 1 week. And this will definitely confirm another opportunity to add more position, had the appearance of retest and trend continuation to the upside. So this is the only perspective we are going to be looking at here to buy the XAUUSD. So if a breakout retest of the 1,983 never happens today, we will have no other choice than to continue to look out for selling opportunities in this market. So we have two structures here. The breakout retest of the 1,993 will welcome buying opportunity. Remember what I said here, a breakout first of all, then we look out for a retest. This is what I'm talking about here. It's going to look like this: a breakout, then price comes back to retest the structure. All this should be observed on a much more lower time frame, like a 10, 15 minutes or 5 minutes time frame. We look out for these patterns here, then we want to join. Then another breakout of the $2,000 mark will welcome more opportunities in this market. So let's keep this in mind while we continue to monitor price action. Then for selling potential here, we already agreed that we are going to be having a sell stop order anywhere below the 1,986 as we look forward to more opportunities to add to our existing sell position. And remember that for those who are still in the sell position in this trade, we have been advised that we move our stop loss to secure the current position, and we have identified that anywhere right above the 1,993 seems most appropriate to secure the current sell position. So let's see how things plays out in the next couple of hours to decide what our next line of action is going to be. If you do have any questions regarding what I just explained, feel free to let me know in the comment section. All right, so moving on to the next pair right now. So the next pair we are going to be looking at is the GBPJPY, which was introduced to us by one of us in the house here on is it Monday? I think it was on Monday or Tuesday, I guess. So what was our expectation on the GBPJPY? So first of all, let's go in on the higher time frame. Let's see what is really going on the higher time frame. So we are going to go into the daily time frame where we started the week, and let's look at what we saw on the daily time frame that made us to make the decisions we have been making so far this week. So the first thing we observed on the daily time frame was the fact that price action has been very bullish since the beginning of this year, and to emphasize the bullish momentum in this market, we connected the series of higher lows here. So after connecting the pivot lows in this market, we have this bullish trend line figured out, and as you can see, price action had consistently respected that trend line. It's only during the month of March that we saw a little breakdown of that structure, which never lasted long. And as you can see the nature of the wicks of this candle, you will see how buyers tried as much as possible to negate all sellers' attempt in that market, and this had led into price action continuing to the upside. Then another structure we identified here on Monday was the 168.00 area, which actually was serving as the neckline of this current structure here on the daily time frame. And you can see how this level had been a major determinant of price action since the mid-month of April. So this area was a very strong selling niche at one point before we saw price action breakout of the structure at the beginning of this month. And since the breakout of the structure at the beginning of this month, we saw how that level had continued to be a buying zone for participants in this market, as every attempt by the sellers to break down that structure has been met with strong resistance from the buyers. Then we went on to look at the 4 hours time frame, where we begin to dissect the structure further. And on the 4 hours time frame, this was what we were able to spot here. So besides the 168.00 key level here, we were able to connect the series of lower highs. So since price action tested the 172.320, the highest point this year, we saw how price action dropped significantly to the downside. So we connected these levels together to give us this bearish trend line. And at the beginning of this week, we said something here that a breakout of that trend line, retest of that structure, is going to be giving us a confirmation to join a bullish momentum in this market. And as you can see what happened here, we had the breakout of the trend line on Monday morning. We saw how price action came back to retest the structure yesterday morning, and since then we can see how price action has been found in higher highs, though in a choppy situation, but you can see that buy potential still looks very, very promising in this market. Then besides that one, we had two key levels that we identified to help us to guide our trading activity. And what we said here yesterday is that as long as price action remains above the 170.00 area, we shall feel comfortable in our buy position. And to buttress this, we have this bullish trend line too as well. So as long as price remain above both the bullish trend line and the 170.00 area, we feel comfortable in our buy position. And for those who have been part of this move right after the retest of structure, well done to you, as you will roughly be with about 70-80 pips in profit at this point. So besides that, you want to secure your current buy position as we look out for more opportunity in this market. Now we have a key structure at the 170.500, where the breakout of that structure is looking very promising at this point. So we want to be on standby to catch that move. So a buy stop order above the 170.500 is looking very promising to be part of this trend continuation to the upside. So let's be on standby to catch that move. So like I said earlier, as long as price action remains above that structure, we shall feel comfortable in our buy position. So we have our stop loss somewhere right below the 170, which is about 45 to 50 pips stop loss thereabouts, and so that we can give room for price action to breathe. So we are looking forward to price breaking out the 170.500 retest. There is a chance that price will come back and retest the structure, which also shares a confluence with the 170.500 to incite another wave of bullish momentum. So let's keep this in mind. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision in this market. If you do have any questions whatsoever, feel free to let me know right in the comment section. Okay, Kali Call, hello, how are you? 613, good morning. Susie MB, good morning to you. JPN, good morning. Cast, good morning. All right, good morning, guys. So in the absence of no questions, I want to assume that we're on the same page. So I will be moving on to the last pair for today, which is the USDJPY. So the USDJPY is another profitable trade for us in the last 24 hours in this market. So despite anticipating the breakout of that level, in fact, we had a whole consolidation phase that lasted about 48 hours in this market. So first of all, let's go through the 4 hours time frame. Let's see what we saw at the beginning of the week and what informed our decision to buy the USDJPY. So looking at the 4 hours time frame, the first thing we observed here is to take into consideration price actions activity since the month of March. And when we connect the pivot lows in this market, we were able to connect this series of higher lows here to give us this bullish trend line here, which further emphasize the level of buying strength in this market. Now, when we fast forward into the month of April, we saw how the 133.500 became another platform for buying opportunity in this market. And one interesting thing about it is that it also shares a confluence with the trend line that we have here. Then in addition to this, then is this interesting structure we spotted at the beginning of the week, and that is the double bottom structure. Now, following the impulsive move that started at the beginning of this month, we saw our price dropped into that demand zone here, hitting the bullish trend line. We saw price come back into the 135.300. We saw our price came back into the structure. Price was unable to break the previous low, and this is a very beautiful sign that buyers are gradually gaining momentum. And as you can see here, this whole structure transitioned into what looks like a double bottom structure, which from a technical standpoint is a very, very strong reversal pattern. And whenever we identify a potential reversal pattern like this, you know what we do next? We want to be identifying the neckline of that reversal pattern. And here we had something around the 135.300, where we were anticipating the breakout of that structure to validate that reversal pattern. And this was exactly what happened here. We saw the breakout of that structure, and price action since then had been continuing to the upside. And the beginning of the week here, we saw our price action started at around the 135.700, which was our support line for at the beginning of the week. So let's go down into the 1 hour time frame, and this was what we saw here right above that 135.700. So for the first 48 hours in this market, we saw our price action was trading within the 136.260 and the 135.700. And for the fact that price action was above a trend line, which we said we are going to be using to guide our trading activity for this week, we looked out for more opportunities to buy the USDJPY. Now, with this whole situation mapped out yesterday, we had a buy stop order above the 136.260 level to be part of a bullish move. And one interesting thing that happened, I think a couple of hours into the New York session yesterday, we saw our price action broke out of that structure, and since then price action had moved over 80 pips in our favor. So congrats to everyone who has been part of this move. And the next thing we want to be doing here is to secure this current position by moving our stop loss accordingly. And with the look of things right here, anywhere right above the 136.650 seems most appropriate to secure the current buy position. Personally, I also had a buy position here after mapping out this whole structure, but we were not able to do this as this whole happened after the live session yesterday. But for everyone who mapped this out and took advantage of that move, well done to you guys for being on standby. So the next thing we are going to be doing now, move your stop loss accordingly, lock in some profit, and let's see how we can actually maximize this move if price action will continue further to the upside. So the next thing I will be doing right now is to acknowledge the highest point where price action has gotten to for this week, which is the 137.200. So let's map that out, and we have a new resistant line here that will be guiding our trading activity for today. So we have the 137.200 level mapped out at this point. So going into the New York session today, this level also will be needed to be broken for us to add more position to our existing trade. Now, there is one thing I would like to state here that might cause some panic in the market and might shake a whole lot of people out of this market, and is the fact that there is a chance that we could have some bearish momentum happen during the first couple of hours in the New York session, where price could drop in the form of a retracement phase, which is clearly will be seen as profit taking activity, as those who took advantage of that bullish momentum around this area will at one point want to be doing some profit taking activity, which will definitely reflect on the chart as a retracement. So it could retrace back into the trend line around the 136.260, which happens to be the trend line that has been supporting that bullish momentum since last week, to incite another wave of bullish momentum. So let's keep this in mind while we continue to monitor price action. Then, since we have a breakout of the 136.250 during the early hours of today, there's still a chance that price will come back into that structure to retest it. So for those who had missed out on this opportunity, and for those who want to also maximize the potential of this move, price might come back into the structure, and if it does come back, we want to see how it will react to that level. So if we start seeing buy pressure above this area, something like a double bottom structure, inverse head and shoulder pattern, or a falling wedge, we want to be getting ready at the breakout retest to join a move to the upside, where a further breakout of the 137.200 will welcome more opportunities. But if price gets into the structure and it breaks down that level, remember we have another bust stop at the trend line, which also shares a confluence with the 136.260, which happens to be our initial resistance line at the beginning of the week, where depending on how price action reacts to that structure will determine if we are going to be buying or selling at the breakdown of this area. So let's keep all this perspective in mind while we continue to monitor price action. Then one more thing I would like to state here is that remember that we have a key level at the 137.200. So what happens if price action does not drop to the downside and instead it continues to find higher highs? Then at this point we have a buy stop order above the structure, looking to take advantage of that move all the way to the upside. So the current structure we have on the USDJPY for today is still looking very, very bullish. So we want to be looking forward to buying opportunities in this market. The only scenario where I will see sell opportunity happen is if we do have a retracement back into the structure, and I have explained earlier that depending on how price action reacts to this area will determine if we are going to be selling, that is a breakdown retest of that structure, or buying at the appearance of buy pressure above that level on our lower time frame. So it's on this note I want to call it a day here on the X Trend Speed Live. It has been a wonderful moment, and it has been a profitable week so far, at least in the meantime. And let's see how things play out in the next 24 hours, and we shall be back here again tomorrow to review how well this pairs has been doing and get ready for the New York session tomorrow too as well. And for those who are joining us for the first time, hope you are able to capture one or two things that will help you in your trading activity for today. So let's see how things plays out, and let's be back here tomorrow again. I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these pairs and instruments have been doing so far. So it's on this note I wish you best of luck, and do have a wonderful and beautiful evening. Bye bye.